Money FM 89.3. Best of breakfast. The bigger picture only on Money FM 89.3.
Welcome to the bigger picture. I say Trump, you say tariff. Together, China, Mexico and Canada accounted for more than 40% of imports into the US last year. And that's making them some of Trump's most valuable trade partners. But it looks like that's about to change, with Trump fulfilling a campaign promise of introducing import duties against some of America's closest trading partners. And just this morning, news broke that President Donald Trump has ordered a 25% tariff on steel and aluminum imports. So, to find out the effects of Trump's latest trade tariff on markets and beyond, let's bring on the show Vishnu Varathan, Head of Economics and Strategy, Asia at Mizuho Bank. Good morning, Vishnu. How are you doing today?
Good morning. I'm very well, thanks. Maybe a little better than the exporters of steel and aluminum.
Yes. Thanks a lot for joining us this morning, Vishnu. Now, a 10% charge on all goods imported from China to the US took effect on 4th Feb, a 25% on all goods entering from Canada and Mexico, but was since paused for 30 days. And this morning, another 25% tariff on steel and aluminum imports. So how much has the scope and scale of tariffs surprised you so far?
I think it has turned out to be that the opening salvos seem to be a lot more broad-based. I mean, we remember the first time around with regards to China, consumer goods were excluded because there seemed to have been some thought around mitigating the impact on households and incomes and the ability to consume. But this time around, the breadth has been a lot greater. And the approach seems to be a sweeping approach to tariffs, which I think cuts both ways. I think on one hand, with what you alluded to, the suspension on Canada and Mexico and China starting off at 10 rather than the campaign bombast of 60, probably has some hopeful optimists thinking that this might be negotiation leverage rather than end game. But I think we need to be very cautious about this.
Okay, thanks for that great analysis so far. Now, it's like what you've mentioned. During his previous time in office, Trump applied less restrictive tariffs on China, and it appears to, apply on all goods, at least during this period of time. So if the measures against goods from Mexico and Canada ultimately go ahead, a range of items are also expected to become more expensive. So can you talk to us about the impact of the latest Trump's trade tariffs?
So let me put that into two parts. So in terms of what has already taken effect, and of course, barring any negotiation after, the steel and aluminum tariffs will immediately translate into much higher prices for goods manufactured and consumed in the U.S. because in the short term, the ability of the U.S. to ramp up production to offset the higher import prices is very limited. And the experience the last time around was it did not have much success in upping production of these goods. If Mexico and Canada, the sweeping tariffs of 25% go ahead, it would be a tariff shot in the foot of the U.S. actually because of the inextricable trade linkages via auto sectors and many other sectors which U.S. companies are hugely reliant on. I mean, the bottom line is the ability and the capacity of the U.S. to ramp up production to offset what's in Canada and Mexico will not be immediately realizable, if at all. So this actually sets back, U.S.'s own industrial ambitions of producing more within the U.S.
Right. And just like what economists have said as well, they have warned that tariffs are likely to raise prices for U.S. consumers. For example, sellers may have to raise the price of goods that they are importing if they are forced to pay higher duties. And some experts have suggested that these new tariffs could prompt a wider trade war and exacerbate inflation. So what does this mean when we're talking about inflation? And to what extent might this temper efforts by Fed policymakers to curb the inflation to their 2% target, Vishnu?
That's a really good question. I mean, it links up many different parts of it. So to be fair, my starting point is that Trump 1.0 tariffs were not as inflationary as the current fears would suggest. There were a lot of mixed evidence around it, and in the headline, it wasn't as inflationary, which is why this time around, the end game around how broad-based and sweeping tariffs are would be an important component in determining how much the knock-on impact on inflation is. We've got one more silver lining, which is the post-pandemic era. We saw a lot of U.S. companies bloat out their profit margins, which means their ability to absorb before passing on to consumers is a little better this time. Nonetheless, if you get sweeping tariffs, I think particularly taking the Canada-Mexico 25% as a gauge, that can lift inflation anywhere between 0.5 percentage point to 1 percentage point. The tricky part for the Fed, to link it up to your Fed question, the tricky part is the Fed must struggle with the fact that the immediate impact is inflationary, but the ultimate impact is actually deflationary insofar that it takes away the ability of households to consume because their disposable income is effectively diminished by higher prices, and so they can consume less. That creates the policy dilemma there, and the Fed ultimately has to decide whether it leads to a so-called wage price spiral where external retaliatory tariffs increasing prices and the knock-on impact on domestic workers demanding and successfully getting more wages leads to an inflationary dynamic, in which case they need to raise rates. Otherwise, counterintuitively, they would need to cut rates to buffer against an adverse demand shock. The fact that they can't determine what the outcome is probably is going to leave them on a prolonged pause for now.
On the other hand, though, Vishnu, how do you see this bolstering domestic production and bringing more jobs to the U.S.? Will this help to balance out the unevenness?
You're asking that question to a pessimist, so I'm going to say not at the breadth and scope that Trump is undertaking. I mean, if this was going to be something really targeted at the right point of the value chain with a lot of cooperation with existing allies and trade partners, then it has got some chance at success. But if it's going to be sweeping tariffs with heightened uncertainty, in the short term, what it could do is it could bring investments into the U.S. because of some arm twisting involved. But we are not sure that it will translate into two things. One is a successful evolution of the industry with sufficient workers at the right price points, and the competitiveness of the U.S. industries, given that China's overriding spare capacity means that the price advantage that China has is simply overwhelming.
All right. Thanks a lot for that breakdown, Vishnu. Now, before I let you go, can we talk a little bit more about currencies as well? Because new trade levies are also expected to start to raise some concerns on its impact on the forex front. So talk to us about the market reactions you're seeing in the currency front, especially with the US dollar and other trade partner currencies.
So the irony for the US is the reflex from tariffs would make the US dollar stronger because it disadvantages the trade partners of US, which then erodes their currencies. So you get a stronger US dollar, and that, I think, partly mitigates the tariff impact, whether it's in terms of imported inflation or the ability to export to the US. But it doesn't fully offset it. And this might create a further problem where Trump continues to double down on his allegations that there's mercantilist policies involved, and now including depreciation of trade partner currencies to take advantage of the U.S. But it's simply a byproduct of his own assault, rather than a fresh mercantilist retaliation from trade partners.
Right. Thank you so much for that. And thank you so much for joining us this morning, Vishnu. We've been in conversation with Vishnu Varathan, the head of economics and strategy at Asia at Mizuho Bank, talking about some of the effects of Trump's latest trade tariffs on the markets and beyond. Thanks for joining us this morning, Vishnu.
Thank you, Dan. Have a good one.
You too. Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.